Welcome back to the show here on Real Estate Monday on Brashenomics. You know, it is interesting about the election because we've never really had the government so involved in the real estate market in American history, especially in the way that they are right now. We're lucky enough to have Joe Eddings and Caroline Loudenback back with us with 32 years of combined real estate experience. They specialize in investment strategies in all aspects of foreclosure situations and have numerous certifications and designations. Welcome back, guys. How are you?
Great. Thanks for having us back.
Yeah, it's good to see you.
Thanks.
So, I mean, it is incredible just simply how involved the government is in real estate right now. And it's tough to make any projections, but, I mean, it's something that it's never been seen before.
Yeah, especially right now. Like you mentioned earlier, your promo you just did, you're talking about the shadow inventory, and it's been quite noticeable here the last 4 or 5, maybe even 6 months as we've done several REO properties. We work with some asset managers, and it's amazing how last half of this year, it just kind of shut up like a light switch.
Yeah.
And everybody has their reasonings, but nobody's really come out and said, hey, this is what's going on. I know tons of properties have been sitting there for over a year, bank-owned, nothing's going on. Or they are actually not even starting the foreclosure process. Matter of fact, we're working with a client right now that's been over 2 years. The FHA loan has not even received a notice of default.
It's crazy.
2 years. So
you know, it's really tough to determine, like, you know, how the government's impact will affect the future of real estate. But there are some things that we do know, at least right now. You know, I mean, we can't look out a year. We don't know what the foreclosures are going to start looking like. We don't know how the government is necessarily working with the banks in order to release properties for sale. But there are some really interesting concepts about the market we're in right now that we do know about. Talk a little bit about that.
Well, we kind of printed some charts here. So we have some data that we came up with that kind of shows what we've seen over the years of, in real estate we've been in. We're kind of rolling to that, into the fall. Now we're getting closer to the holiday season. And what we're seeing is a lot of people who have been in the market, couldn't sell, take their house off the market, or if they think about selling, they're just all kind of going to wait till next spring to hits. So what we found is, especially right now with money almost, I call it being free. I mean, we're at 3.5% interest.
If you go look at like a bankrate.com or something like that, you track them all. It's mid to low 3% range.
It's free. The buyers are out there, and they're always looking to buy. And what happens is now the inventories, we had a low inventory all summer. Everybody's been talking about that. You've seen the headlines. But it's even getting lower, but the buyers are still out there. So what we're seeing is, what we're telling our clients is if you're smart, I would do the opposite. Right now is probably the best time to put your house in the market. Through the November, December, January, February, the first part of next year is the fact that the buyers are there, interest rates are low, and inventory is drastically low. I mean, we're just looking at just from last year, we are down over 35% from our current listings. We're at 4,600 listings? No, we were at 7,175 listings, all in King County. We're now down to 4,600. That's a 35.2% drop from last year. At this time,
that's 30, almost 33% less houses on the market, and there weren't a lot of houses on the market a year ago at this time, were there?
Right. But there's more buyers now than there were a year ago. We're seeing that.
So you talk about why people should put their house on the market right now. If there might be low inventory, but aren't people risking potentially, if the market continues up the way it has been for the last year, leaving some money on the table?
Not really. I think right now when we have low inventory, that's it's just it's supply and demand thing where you're not competing against as many other sellers, and so there are a lot of people that traditionally wait. I'm going to wait, get through the holidays, wait till the spring, that kind of thing. Well, now you're going to be in there with everybody else that did that as well. So I think now's the time. This is a unique opportunity, and the market, there are really frustrated buyers right now because there's no inventory, and we're actually seeing multiple offers again when you have a good house that's reasonably priced. So
yeah, we're looking at neighborhoods right now. We have an appointment tonight up in North Seattle, and this particular neighborhood we're looking at, we pulled up compatible listings for this property. I mean, we're coming up with 1 or 2 listings within a mile to 2 mile radius around these properties. So talking about not leaving money on the table, it's called supply and demand.
Could a seller reasonably, and this is, could a seller reasonably, if you have 1 or 2 houses in competition, could they drastically just overprice it and see what happens? I mean, if it is all about seeing what the most they could get is? Because if you have no competition or one house that's in competition, and I know from a real estate perspective, I understand the goal is to sell the house. But if the goal for the seller is to maximize how much money they can get for it, is it worth overpricing a house and seeing what happens for the next 3 months?
I would say yes and no. One thing we're finding is buyers are pretty smart these days. Okay, they're pretty educated. They have the internet. They can analyze, and they're looking. They can see what things are going for. They can sniff out a house that's overpriced, and we're seeing that. We have one deal we're looking at right now that basically is a little high, but they're not getting any action. But everything that's around them is selling. I mean, we're talking a difference of $20,000, $25,000 different for what things are selling for, and it's just sitting there. It's a very nice, quality, clean house. So buyers are pretty smart. So I say yes and no.
Because what it sounds like, and we've been continuing this conversation from show to show, is buyers are really hungry, but they're not willing to overpay by 2 or 3%. It's like this. They want this 1% margin of error, and there's this very tight window that properties are essentially trading in.
Correct, and also if we represent a buyer of the house, we're going to do our data. We're going to do our homework. That's what we do. So when we go to make our offer, we're going to go say, no, this is what comparables are showing where the value of the house is. If it's overpriced, we're going to be very aggressive on my offers, because we're working for our buyers.
Sure.
So if agents are doing their job, they're going to try and get the best deal for their buyers.
So here's, I guess, the question. What's going to give first? Because if there's 1 or 2 houses on the market, that means people aren't getting enough for them. And if buyers aren't willing to pay more, you end up with this big gap. I mean, right? I mean, it's because, as you were saying, money is historically cheap, so buyers want to buy now, right? There's buyers who want to buy throughout the holidays. And so how do you end up, how does that gap get bridged?
Well, eventually reality hits, and if they've really got a compelling reason for selling, then they tend to bend a little bit, and the market kind of tells that story, and so you're gonna, reality often moves these situations, and sometimes they end up kicking themselves. So a reasonably priced house on this market is going to get some action, particularly if you're in a good location. You could probably price it a little bit higher if you're in a great location or you have some unique, really desirable features in that house, but by and large, sometimes it's, unfortunately, they think it's really special, but in a buyer's mind, it may be a commodity if, as long as it meets
a commodity of one.
Right.
I mean, that's where that's kind of what I'm getting at.
Yeah.
There's this difference of, there's lots of houses out there, right? You drive by, you see them all, but none of them are for sale.
Right.
And so there's this very strange, we see it on our side too when we're financing houses. Well, I don't want to pay too much. So you end up with this incremental, I'll pay 1% more, or I'll pay a couple thousand more. And the seller's like, I'm not going to sell it for 1,000 more than it's just a very strange time.
Yeah, but the other thing we're seeing too is, which I haven't seen in probably a good 3, 4, or 5 years, is we're seeing getting multiple offers on houses. If they come in very competitive price, it's one of those really popular neighborhoods with a low inventory. We're seeing several deals with multiple offers, even on short sales and REOs if they come in with a good price point. So actually, that's not a bad strategy. If you're in one of those markets that I would analyze and look at it if you wanted to sell, and I say, man, you are unique. There's nothing around you within a mile or 2 miles. It's a very popular neighborhood. So if we price this right, you can almost, the market we're seeing right now is you could actually expect, depending on the house and the condition, location, and how it's marketed, you could actually try and get multiple offers on properties. We're seeing a lot of that now, which we haven't seen in years.
So if somebody gets multiple offers on a property, and now basically, maybe they listed it for, let's just call it 400, and now it's been bid up to maybe 420 or 425. Is that really where the baseline is? I mean, over time, so that's what it's worth. So I guess the thought would be, is that the baseline now? Is it really just a pricing strategy to try to get up to that number? Is it a marketing strategy, or?
Again, it depends on the neighborhood and the location. There's some areas that will justify that and some won't. It's a chess game. It really is.
Yeah, we're here with Joe Eddings and Caroline Loudenback with the Eddings Group, guys. So you talked a little bit about how the solds are up, the listings are down. Is it coming? I mean, we talked about some of these numbers, and it's very obvious there's no inventory. In fact, we talked to somebody who on Somerset. Apparently, there's 2 houses for sale on Somerset right now. There's like 2,000 houses. I mean, it's right behind the studio, and that's what I'm just trying to gauge is how do you get back to a healthy market at this point in time?
That's a good question. It's why is the market the way it is right now? Why isn't there a quality of listings out there? Why are we seeing this right now? I mean, that's a really good question. And so,
that's where you get into the REO. We don't know why the banks haven't released them. We don't know a lot of that information.
Yeah, what's going to happen here? That's why I'm telling people now is the time to do this, because who knows what's going to happen come around the corner, coming up next year. I mean, if you want to look at the REO properties, we're talking about that shadow inventory. 3 years ago, 3 years ago from this month, we are down almost 40% of REO listings. If you look at 1 year, we're down 52% from last year. Currently, we have in King County. I'm talking about just King County here. I mean, I could have done the whole list, but it's just this is a pretty good indicator. There's 157. It's 200.
Yeah, we have less than 200 REO properties in King County right now for sale.
So can we blame the big banks again?
Yeah, they're sitting on them for some reason. There's something going on. So
I mean, you talked about this guy who hasn't made a payment in 2 years.
Right.
And nothing, just
nobody's knocking on his door.
It's amazing.
Yeah.
Well, short sales are also down almost 40%. So something's going on. Maybe loan mods are starting to be, more of a reality, which in the past, were good luck. But
and we're also seeing if banks start foreclosing, a lot of people are saying, well, maybe we don't have to sell right now. We'll just ride this out. Take the money, start saving it if they're not making their payments. 2 years is a long time.
Yeah,
I'm seeing more and more of that. Time. So, the inventory right now for REOs is, again, if we don't get one more REO piece of property listed in King County today, within just a little over 1 month, they'll be all gone. They'll be sold.
Have you talked to a lot of people then also? We talked about the rising house prices. People maybe waiting so that it's not a short sale anymore, waiting until their equity comes back, figuring if they wait 4 months, 6 months, a year, they're not going to be in that short sale category anymore. I mean, is that something that people are waiting for, or are they not discussing it?
We're hearing more of that.
Yeah.
We've actually had a couple deals this week. We talked to people, said that they're just going to kind of write it out and see what happens maybe next year. But I'm telling, the way things are going, I don't see the prices just spiking and going way up into a point. Because some of these people who are in short sale situations, they are upside down. I mean, some of these people are going to take 8 to 10 years to what I call break back to a neutral equity, which means enough to sell the house, pay the closing costs, not wipe with any money, but just get your loan paid off so you don't have to do a short sale.
Sure.
And you calculate this, some people are, if you start doing a 3 to 4% appreciation per year, some of these people are it's going to take them 10 years to get back to that neutral position. Well,
guys, we do have to go to break. Thanks so much for joining us. And on the appreciation piece, though, I would say when Amazon moves into 1.8 million square feet of office space downtown and people need a place to live, you're going to see it because they aren't going to live underneath I-5. They're going to find a house somewhere, and I don't know how many people are moving into that office space, but it's a boatload. Right. Hey, thanks so much for joining us again, Joe Eddings and Caroline Loudenback from the Eddings Group. When we come back, a good friend of our show, Eric Robeson, is going to join us, and we are going to discuss a little bit more about the real estate market. We'll be right back after this break.